We are Keys and Gears, the podcast where we give you the keys to real estate and the gears to get you there.
We break down what's really happening in the Dallas market.
And we give you straight talk that helps you buy smart, sell wise, and live well.
Let's roll.
Welcome back, everybody. I'm Mark Liesner. I'm a local mortgage broker here in Dallas, and this is Bess, Dickson, local real estate pro. We're our Keys and Gears, where we're kind of lifting the curtain behind real estate and kind of giving you the nitty gritty of real estate, what you need to know. And today's topic, if you missed part one of this, actually go back and find the episode about HOA, right? So that was part one. We already did 6 questions on HOA, what you need to know on a home. Critical questions you need to know before you buy a home or a condo that's in a homeowners association. So this is part 2 of that. And today we're going to talk about the next 5 things you need to be asking for. Number 1 is litigation. Are there any lawsuits with the HOA? Number 2, board management. Number 3, HOA insurance. Number 4, lender requirements. And number 5, marketability. And on the 5th one, I'm going to come to you, Bess, because that's more of a real estate question. The first ones are more of a lender questions because lenders also look into all these items. So let's dive right in. Litigation. These things, HOAs are, I don't know if you have experience with that or you have anything to share on litigation that you've been involved in or have heard about.
Yes, there was a condo complex here in Dallas that lost their insurance.
Yeah,
they lost. Well, they could not get coverage on their building insurance.
Wow,
because of not performing maintenance. The deferred maintenance kept being deferred,
which we covered in the first part of this. The previous podcast,
right? And so there was. They were able to stop it, but there were some homeowners that were going to get together and sue the HOA board
for not doing
the actual
their job.
Board members,
yes,
fellow homeowners,
yes,
for not informing everybody of this, of breaking the 6 rules that you covered in the first episode. And it was a kiss of litigation, but it was there. It was talked about.
And that's also part of number 2 that we're going to talk about today, board management. But on the litigation part, the reason, there are going to be lawsuits. It's just a fact of life. It's just there are some lawsuits that will stop you from being able to sell that condo or that home. So that goes to number 5 that we're going to talk about today is marketability of that home, of that condo. So with litigation, you just need to know what's going on litigation-wise. And some of these lawsuits are frivolous, so they're not going to go anywhere, but at least get an idea of what's going on. And if there are some major ones, your lender will say, we can't do the loan, or not in these terms. We can find another lender for you, but those loan terms are not going to be as good as the ones that you currently have. So that's number 1. Number 2, board management. We briefly touched on it. Read the review, read the board minutes. How often do they happen? How often are they meeting? Are they transparent? Is it a bunch of gobbledygook, or is it to the point and precise? And because the board management affects how well the HOA operates.
Yes.
Which affects your value.
Yes.
Of that home you're buying in that HOA, right? And I've heard some nightmare stories about, board members, not talking to anybody and really being non-transparent. And that's just a bad sign, So and
just to clarify, there's a differentiator between board members and management, HOA management companies as two
separate organizations.
2 separate. And not every homeowners association, HOA, has a management company, but every HOA does have a board. So anyway, there you go.
and the management of the board management also decides, for example, the next point, which is check into what kind of insurance do they have, what kind of coverage do they have, and make sure that the coverage is enough.
Adequate.
A lot of times it's less than enough, and for what those numbers are exactly, I would have to review the budget. So come to a professional like me, and I can say, is it enough? Is it not enough? But not knowing it is not, not a good answer, right? So know what the coverages are, and let's look at it together and find out if that's enough to cover. And most of them are underinsured, which means that it's going to come back to you at some point because the insurance company will pay out on the claim, but then there's a shortage, and who's going to pay for the shortage? All of you owning in the HOA will have to cough up the money.
Homeowner
So
cooperative.
a special assessment, as they call
Special
it, the fun
assessment.
stuff. So lender requirements, that's more for me. But again, all the things that we've talked about in these 2 episodes, a lender will look at it themselves. But they have a guideline that may not be, as stringent as yours should be as a homeowner. Lenders may look at it a little differently and less stringent. And so therefore, I want you to do your own due diligence and ask these questions and find out about it. Not just rely on, well, the lender said it was fine. That's sometimes not the best answer, right? Any experience with that?
What? Oh,
Lender requirements that have blown up deals? And
yes. Well, that's maybe another episode because we
Yeah.
could go into whether a condo community is warrantable or not.
Right.
Whether it's FHA
which means a
approved
lender
or
can
not.
lend money on it, right?
All these things.
Right.
Some buildings in Dallas specifically we all know they're cash or conventional.
Yep.
And sometimes not even conventional. If you don't put enough money down, no lender wants to take a risk with you. It's a partnership,
Yes.
a mortgage is to a certain degree.
There are buildings that are non-warrantable, but I personally, as a mortgage broker, still have lenders who will lend on it.
Boom,
So
there you go.
you don't have to go cash if it's non-warrantable. So there are options, but most people don't have those lenders. But again, those terms are not going to be favorable compared to a building that is warrantable. So, and there's a reason why it's non-warrantable means that these items, these due diligence items, are not in order. That means a red flag. Okay, so that should be a red flag to you,
Right. So all of us that bemoan the fact of government inefficiencies, that should really hammer home what Mark just said. And that is, if the U.S. government, which is the group that decides whether a condo unit or a home is warrantable or not, if they say it's not,
right? You should have lots of red flag, red flag. Wait a minute, do I really want to buy this unit? Do I really want to buy it? And anyway, so that's
everything's a money solvable problem.
And the last part goes to this
marketability.
To the marketability ties it all together. How hard will it be for me to sell this condo, this home, when I want to sell it, given all the red flags?
Right.
Or how well the HOA is managed makes a difference to the value.
Agreed.
Right.
Agreed. Whether the value is increasing at a rate that you're comfortable with.
Right.
Or is it just stagnant? Because what you've heard at cocktail parties is true. Generally, condos do grow in value significantly less than single family homeowners. This series maybe has given you some insight as to why, but there's also some condos that grow at a higher rate than other condos for all these same reasons.
Right.
There you go. So yeah, marketability. It's marketability meaning how appealing is this unit going to be to the future buyer.
Right. Or a broader segment of the market, right? Condos in certain markets are not as appealing, and in some markets, condos are more appealing than a single family house.
Yeah, there you
So
go.
it just depends.
And if you're an investor, you actually do want to find that condo that may be struggling, because yes, it can be turned around.
Right.
It's just a matter of time and money. Right. There you go.
Yep. So there you have it. Those are 5 extra things to look at, 5 critical questions: litigation, board management, HOA insurance coverage, the lender requirements, are they being met, and how marketable is this condo?
All
or
good stuff.
Single family home.
Great stuff, Mark.
So
dry, long.
yes, I'm sorry, but these are the non-fun stuff. But you're going to thank me later. Trust me, you're going to thank me later if you really went through this.
It is important gear to the purchase process.
Yes.
I cannot disagree with you yet.
All right, so our photo of the week. So
All right, so I'm sharing
looking
with
at?
you the post-pandemic home hack that I'm seeing more and more often, especially in suburbia.
A she shed.
or a don't have the money, time, or desire to add on to the main house, but we need a home office, or we need a
Yes.
home gym,
Yes.
or we do need a mom timeout spot, she shed, a hobby area,
Right.
all these things. So these pre-manufactured buildings that you see online
Yep.
or Lowe's or Home
Yep.
Depot are rapidly becoming actually worth way more than one once thought. They are way beyond the old, when you and I were growing up, the
Right.
old garden shed days.
Right.
You put in spray foam insulation, so these buildings can run about $7,000. You put in spray foam insulation, and you put in drywall, and basically treat it like a house. You can put in a window unit, yes, or you could put in, my favorite is the Mitsubishi. I know they're not sponsoring us, but the Mitsubishi Split. Those things are magical.
Yes.
They are absolutely magical. You'd be surprised how much you can climate control these
Yeah.
sheds. I was in one the other day that is an amazing triathletes workout studio.
Really?
And they had
Stationary bike thing.
stationary
Yeah,
bike,
yeah.
weights,
Right.
resistance, the whole shebang. They had put in the foam square
Mm-hmm.
flooring, but they had done when they had the company come out and do the spray foam insulation. They also had them do underneath, so they did the whole envelope.
Yeah.
So they did the walls,
Yeah.
the ceiling, and
probably
then
smart.
underneath as well.
Very smart. Yeah.
That held temperature amazing. In fact, the day that I was looking at the house with some clients, they did not even have the Mitsubishi Split on. They just had the windows open, and it was like maybe 85 degrees outside. And that place, when we opened the doors,
It's fine. Yeah.
comfortable. It was
Love
very,
it.
very impressive.
It's a good
so if
hack.
you're looking for an office on a budget, and especially if you have littles, and here's something, one of my
Yeah.
clients, the house was missing only an office, but otherwise the location, everything else was exactly what they needed. So we did, during our due diligence period, find out what the cost was going to be. We found a contractor that could help us with all this. And she said it's fantastic because she can literally tell the kids, I have to go to
my
the
office.
office. And so it's great for the littles because they see mom leaving physically. Anyway, so that's my current, I'm high on it hack
Yeah.
as far as
That's good
a
value
great
for
home
money.
improvement.
Yeah.
Great
Yeah.
bang for the buck.
Yeah.
There you go. And we
Love
hope
it.
you feel like you've gotten a great bang for your time buck here with us at Keys and Gears. And yes, HOA part 2, a little bit dry, but hopefully it'll save you some cash in the future and save your vacation from being spent on a surprise HOA expense. There you go.
If you have any questions, please email us at keysandgears@gmail.com. Follow us, like us, subscribe. Please forward this to somebody that you think can, gain knowledge from our podcast. So we look forward to seeing you next time.